Monday, August 19th, 2019, Maneco 64, home of alternative economics and contrarian views. So this morning, I'm going to look at GDP and how you actually calculate GDP and go through the budget deficits or budget balances for all the major countries and show you how things are not as they seem. We're told in countries like the US and others, or China, that their economy is still growing quite well. They have the greatest economy. And then they look at Germany and say, oh, Germany has had negative growth, even though it's quarter on quarter. So I want to dispel the myth about GDP and tell you what I personally think about GDP. And it's something I've done before, but as I keep getting new subscribers, new viewers, it's something that I feel is important to cover, especially with what's going on right now in the markets. And it's very dangerous because it gives false signals to businesses, to individuals. And I think it's really important to look at this. Before that, of course, I'm going to look at what the markets are doing. It's 7:30 a.m. London time. So we've got spot gold at 1508. It's down $5. Range has been 1505 to 1513.90. Is gold going to correct? We've had almost like a straight line since the end of May. Gold has been making higher highs and higher lows. It's, I think, except for 1 week, it's always been up. It's possible. It's possible. But we just have to wait and see. As I've said before, and I won't tire of saying it, things don't go up or down in a straight line in markets, nor in nature, I would say. So spot silver right now is down 7 at 1703. Range has been 1696 to 1719. So precious metals under a little bit of pressure. Stock market continued to rally. We know that of reports that President Trump called in the major Wall Street banks who own the Federal Reserve on Wednesday after the market dropped 800 points. So I'm sure they're doing all they can to get the market back up. So yeah, the Dow's up 200 this morning, or 0.8%, 26,101. S&P is up 23, or 0.8 at 2912. NASDAQ 100 future is up 0.87% at 7668. So yeah, we're told that America is a free market, how can I say, system, capitalist. But we see the government working together with the banks, right, to try to juice up the market. Is that really free market? Am I saying that socialism is better? No, but I'm just saying we don't have a free market. And you see when I talk about GDP how much of a sham that is, not only for the US, but a lot of other countries. So currency-wise, yeah, dollar is a little weaker against the pound. The pound is up 0.2% against the dollar, 121.68. Euro is at 110.90. Unchanged. Dollar is at 106.40 against the yen. That's unchanged as well. And the dollar is up 0.2% against the Chinese yuan, 705.60. Crude oil, WTI is up 1.3% at 55.47. So as we see the stock market rally, we see oil rally, which is something that 20, 30 years ago was the opposite. If the oil had to go down for the stock market to rally, but nowadays it's reversed. Brent is up also 1.3% at 59.09. What about the bond markets? People are watching the bond markets quite a bit. Yes, yields are backing up. They're rising right now because it looks like risk is back on, as they say. People are not as concerned. Stock market is rising for now. We've seen a rebound since Wednesday, even though on the week, last week, stock markets didn't have a very good week. But since Wednesday, they've kind of stabilized. So right now, the 10-year yield is up 3 basis points at 157. The 3-month is at 187. So inverted by 30 basis point. What about the 2-year? Well, the 2-year is at 150. So the curve is didn't invert from 2s to 10s last week, but now it's normal again. It's disinverted. The 30 years at 2.056. The 1 month is at 2.062. So that's the bond market. So before I go into GDP, the analogy about GDP for me is like, for example, here in England, we have a saying, fur coat and no knickers. Those are for people who drive around the big car, have the big house, and then something happens and they have to like sell the car, sell the house, rent, and you realize that all that was on credit, on their big mortgage, credit card debt, several credit cards, and that's the same thing that's happening, I think, to a lot of countries. And that's what I want to talk about GDP. We know that a strong economy should be an economy where government is small, where the private sector creates wealth, right? So let's look at GDP. First of all, there's a few definitions of GDP. There's a production approach of GDP, there's an income approach, and there's an expenditure approach. And I'm going to look at the expenditure approach because it says here, according to the U.S. Bureau of Economic Analysis, which is responsible for calculating national accounts in the United States, and I quote them, they say, in general, the source data for the expenditures component are considered more reliable than those for the income components. So they use this to calculate GDP in the U.S. So the equation is the following. GDP, which is Y, is the sum of consumption, investment, government spending, and net exports. Exports minus imports. So something that should flash red light, flash yellow or red, whatever, to you is government spending. How can government spending actually be domestic product, right? Because if you think government doesn't produce anything, the only thing government knows what to do is to tax people, tax the private sector, and redistribute that income. That's what government knows. That's what government knows best. And even the government spending, that's backed by taxation, but it's also backed by borrowing. If governments spend more than they take in from taxation, they have to borrow. So they include all of that in GDP. That in of itself doesn't make sense, right? That they include government spending in GDP. So if you took government spending and borrowing out of GDP, you would get a much more, how can I say, clear picture of how the real economy is, the private sector is doing, right? Because we know governments don't invest, governments don't make profits. All governments do is redistribute wealth, right? They extract wealth through taxation and they redistribute it. So that's how GDP is calculated. Yeah, consumption, I agree, investment, not government spending though. And net exports, I agree as well. So that's why if countries are running a budget, if the trade deficit is higher when they publish numbers, you can see that the forecast for GDP go down, right? So with that, we're going to look at the GDP data here. This is from The Economist. It's from the back of The Economist. It's called Economic and Financial Indicators. This is the latest one, August 17th, 2019. So United States, gross domestic product. So the latest they had, and this is year on year, is 2.3% for the second quarter, right? The forecast for 2019 is 2.2. And then we look at the budget balance percentage of GDP. So the US is estimated to be running a deficit of almost 5%, or exactly is 4.7%. So now that I've gone through this GDP equation, how they calculate it, if we took out that 4.7 deficit, which is extra spending through borrowing that the government is doing, really, if you take that out of 2.2, that would be negative 2.5%. That's what the real economy in the US is doing. It's actually contracting by 2.5%. So is that really a good economy? If it's been supported by extra government spending that doesn't even match taxation? So let's have a look at China. Well, China, it says here, they estimate 6.2% GDP growth. Their deficit is 4.5%, so almost as bad as the US. But if you subtract that from 6.2, you get 1.7% growth positive. Not as good as 6.2, right? But still not red like the US. Japan, 1% GDP growth estimate. Budget balance, -3, so a 3% budget deficit. That means Japan's actually shrinking the private economy by 2%. So is it any wonder that people don't believe the economic data? People know that things are not great, right? You've got wealth inequality. You still have a lot of people in the US. It's almost 100 million out of the workforce. So you can see why. Britain, they forecasting 1.3% of GDP growth this year. The deficit is 1.6. So not as bad as the other three, but that as well is shrinking by 0.3 if you do the calculation. Canada, 1.6% GDP. Budget balance, 0.9% deficit. So actually Canada is growing by 0.7, the real economy. And now to the fun part, the euro area. Euro area is the part of the European Union where countries use the euro. A lot of people think that all the countries in the European Union use the euro, but they don't. So in the euro area, the GDP forecast for 2019 is 1.2. The budget balance for the whole of the euro area is minus 1.1%. So the euro area is just growing by 0.1%. It's a lot better than minus 2.5 in the US. And we're told that Europe is socialist. They're not growing because of socialism. And it's partly true. All their labor laws that discourage people from finding a job, yes, that doesn't help. But if you look at the euro area, actually, they're not spending as much, the governments, as the US. One country I'd like to look at is Germany, because Germany is actually, their latest GDP actually shrunk quarter on quarter by 0.3. And in the US, all the numbers we get for GDP, they're all annualized. So we never see the difference quarter to quarter in the US. And I would speculate that if we did, we'd see a lot more negative numbers. And they used to publish these numbers, but they don't. But the European countries still do. But anyway, the 2019 GDP forecast for Germany is 0.8%. Wow, that sounds a lot worse than 2.2 that the US has, right? But let's look at the budget balance for Germany. Well, Germany doesn't run a budget deficit, their government. They're actually running a surplus of 0.7%. So if they ran a balanced budget, you would add that 0.7 to that 0.8. So actually, the German economy could be running at 1.5%, and that would still mean that the government would be running a balanced budget. I think they're running a surplus because they want to pay off debt. So what about the Netherlands, for example? Well, they're running, their GDP forecast is 1.7% for this year. they're running a 0.6% budget surplus. What about Italy? Well, their GDP is forecast to grow by a measly 0.1%. Their budget balance is 2.5% deficit. So actually, and if you take that off 0.1, that's minus 2.4. So the Italian economy, the private sector is actually running just a little better than the American private economy. So just looking at the numbers, I'm not trying to bash Trump or bash anyone. I'm just looking at the data. As you can see, GDP is not what it seems. So if you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.